Hi everybody, my name is Michael and I'm a full-time trader at True Traders. Today I want to show you which strategy I have used to get funded several times. I want to show you how I trade it, but I also want to show you how you maybe can trade it because the way we approach it, the way we trade it depends on our lifestyle and how much time we have. As a full-time trader, I obviously have a lot of time in front of the charts if I choose to. So I traded by alerts, but you maybe have a full-time job, as I did when I started trading. So you maybe only have 1, 2 hours per day where you have time to trade. So I also show you how you can do it in that approach, in that perspective. In the end, I will also show how much I trade and how many times I use this strategy during the day and what is enough for me in terms of profit. But stop talking and go to the charts. So we are at the charts with copper futures, which is my favorite pair to day trade. I use three assets: copper, gold, and Nasdaq. So, but let's start with the first trade example. That is here. That is a simple one. But by the way, I'm taking trades for the last 2 days. Yeah, Wednesday, Thursday, and Friday, last 2.5 days. And so you can see what opportunities. And that this year is only on one pair. In general, there is around 1 to 3 good trade opportunities with this strategy per pair. So with three pairs, it's between 3 to 9 opportunities per day. But normally only trade 1, 2, max 3, which is more than enough for me. So, but let's start here. We can see this year was earlier today. First of all, we can see here we have a good trend line up, and within that we have a smaller trend line, and we can see first price is doing come up here in the high. I would have an alert up here, so when this alert here goes off, I place an alert above the high because for me to get a bearish divergence, I need the price to go up to the previous high. So when I place an alert here and it goes up here, I can go and check to see is the RSI going down and then create the bearish divergence. But I need more confirmation than just the divergence. Otherwise, you can catch a falling knife all the way up, and then you will lose your account. So there are several ways to approach this. The more secure way, which I prefer, is when you can see first you have the break of this trend line here, price is ranging. You make this resistance area here. I would use a box. And then you can see here it broke the second trend line. And this here would be a valid short to do it here. Let's put the icon just at the close, put the stop loss above here. And again, this here is the obvious resistance down here. Sorry, or the obvious support area down here. Do like this. So down here you can see we are live now. So this here would be a fair place to have your GP, take profit. Another way could be to wait for the retest. When you have a bearish divergence or bullish divergence, any divergence, that is often mark a change in the trend. So when you have a change in the trend, a change in the trend before it went up, so now it's going down, which means you can take pullback trades with the trend. And that is also what we have the opportunity here with the resistance. First, take the pullback. That will be here. That's the first one. Again, you can put the stop loss above this high or this high, depending on your temperament and risk. So this here was the first example. Let's do the next one, which is here. This is a little bit more complicated. So first we look at the market structure. You can see price made this V-shaped form, which is a bullish form. You can see over here we had the exact same form. a V-shape, bullish, and then a pullback and retest, and price continued up as a very good reversal. So we know from analyzing the chart in the morning that now we have the V shape, so we expect the price to make a pullback and then continue up. So what we do, I have an alert down here. So when the alert was taken here, that is here, I made an alert on the chart below this point here, right here. So I didn't have to sit and watch the chart. It's kind of boring and it's not productive. So after I placed this alert here, I went to work with some other stuff, and then this here was 10, and then around 1 hour later, the alert from this point here went off, and I could go and it went off here, so I had 5-10 minutes. So I went open the chart and see what happened. So here is the first support level, got hit it, but then what is most significant is that cross candle here. When you have this cross candle at a support after a strong trend down like this, it often gives a reversal. So the way I would have traded it, you don't have to do it the same way, but the way I would have done it is that with this candle open here, I don't have my stop loss below here, the support level, that would be my trade, and I would have TP around here. Why would I have it up here and not further up? Well, first of all, because of the time. This here is 9 in the evening. The charts are closing 2 hours later, so I didn't want to have the trade to open after midnight. So I was conservative, and this year was 1 hour later. My TP got taken. If, for example, this year haven't been evening, then I would have TP'd here, maybe take 50% off my trade, and then here at the break of this trend line, I might have added to the trade. Sorry for interrupting the video, but if you would like our help to become profitable trader or to do it faster, then there is a link in the description about our mentorship, where we can teach you to use your own strategy to become profitable, or you can learn our ways of trading. And please like and subscribe the video. So let's go through the last two examples, so this video don't take too long time. That is here. Yes. So this here was Wednesday, yesterday. But and now we have a kind of another scenario. We do have the bearish divergence here, but if you look at the context, the price is in a downtrend, and there's no reason to believe that downtrend won't continue, because you have here, right here, it broke the market structure, so we can only expect for the price to pull back, but not go as far up. And this here is the first obvious resistance in the downtrend from here, this one here. So how do we trade that? I would trade it this way. We have the bullish divergence. First, I have my alert here. When that goes off, I place an alert below this wick here. So when it comes down here, that also goes off. And now I know it's time to focus on the chart and see if it is a possible trade. So here, this here we use as support. Price rejects here. And then when it breaks the trend line, I would just I would trade this here immediately. Have my stop loss below the wick, and I would just have my TP here, so a little bit more than 1-to-1, which is fine. That is a good trade. That is a profit in the bank, and it's a safe trade because you have this resistance up here, and price is in a downtrend. You could obviously trade it a couple more times, but I would only do it this one time. So let's go to the last example, which is here. Still, this is Wednesday morning, yesterday morning. So first of all, we have our alert that goes off here, And when that goes off, I put an alert below this one. This one went off pretty fast, and I waited until my support level. So why did I take this support level here? You can see here price reject, 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 reject. It's a good support level. So price rejects here, and you can do it two ways. You can do a trend line from this one here, or you can do it from here to down here. I use this trend line here. So price broke this structure here, went up, and then I traded the retest here and waited until it broke trend line, and I had my stop loss below here, below these lows, and my take profit was up here where you have this resistance area. Yeah, that was not nearly 2, but the 1.9 RNR trade, and which was perfectly fine for my use, for what I want to have in profit. And this here was a pretty safe trade. You have the bound, change of market structure, pullback, and then the break of trend line, and then long, and you have the bullish divergence to confirm it. So that was 4 examples of how I trade RSI with divergence, and this strategy has really got me funded many times, and I use it nearly every single day. So how can you trade it without without being able to use alerts? Maybe you are working outside, maybe you're working a place where you can't switch to a chart, or maybe you just don't want to trade in your work time, which is also completely fine. When you're working, you should be concentrating about that. So you can do that, and you can take sessions. Let's say you have time after work, 2 hours from 6 to 8 in the evening, and then you choose more pairs, and that means you will have more options. But of course, you need to backtest these pairs. You need to be sure that it works for you. Just don't just copy my way of trading. Do your backtesting, document the backtesting, be sure that you understand it, be sure it works before you do an evaluation or before you put real money in it. Always do your backtesting and demonstrate a little bit so you're sure it works for you. Because even that, when I show it, it kind of looks simple, and it is also simple for me. But I've been trading this way here a long time, and I have done tons of hours of backtesting. So I have it on my backbone. So please do not just jump in and trade it. Do your own due diligence, backtest it, test it so many times, and then you can start to trade it. And again, keep it simple. If when you see these setups here, if something seems odd, it doesn't feel right, don't trade it. Just don't trade it. Wait for the next opportunity. It's very important that we don't lose money. As long as we try not to lose so much money, then the gains will come by itself. But I want to thank you all for listening, and I'll see you on the next video.
Tell them how you're feeling, Ems.